So how do you actually trade the trending markets? If you can identify a trending market, it'll be easier for you to trade it. If it is a bullish market, you will look for buying opportunities because you have to trade with the trend. As you might have heard already, the trend is your friend. So you never try to trade against the trend. But if the market is bearish, you have to look for selling opportunities. Trending markets is characterized by two important moves. So the first move is called the impulsive move, and the second move is called the retracement move. So the retracement is also called as a correction, which is this move that you're seeing right here. So the impulsive is the move in the direction of the trend. So that is the overall move in the direction of the trend. And then the retracement is this short correction right here, which forms our, so in an uptrend, that is the market that will form our higher lows. So our higher lows, as you can see right here, our higher lows are basically formed by the retracement move. And then the higher highs in an uptrend are basically formed by the impulsive move. The impulsive move is the movement in the direction of the trend, and then the retracement is a correction. We also call it a correction, and that is the one that makes this the higher lows in the uptrend. And in a downtrend, basically the impulsive move will be making the lower lows, whilst the retracement will make the lower highs. So that's basically what an impulsive move and the retracement basically is. As you can see that the market is making high highs and higher lows, which indicates a bullish market. The market is making two different moves. The first move is the impulsive move, and then the second move is called the retracement. It is important to understand how trending markets move so that you can buy at the beginning of the impulsive move and take profit at the end of it. So traders who buy an uptrend at the beginning of the retracement move always got caught at the wrong side, and they don't understand why the market hit their stop loss before moving in the predicted direction. So let's say that you actually entered this market right there, you see that it's in a bullish market, but then you enter here. That means that the market is actually going to do the retracement, which might hit your stop loss before it goes in your direction. So that's what most traders experience. As you can see, this is why it happens when you trade in the market, in a trend market. Right? So you need to learn to enter and exit at the right time so that you don't get kicked out of the market before the market actually moves in your direction. So that's basically why you need to understand the retracement and the impulsive moves. The best way is to enter at the beginning of the impulsive move, and then ride the wave all the way to the end of that impulsive move, or you can trade the retracement where it starts to the end of it, depending on the time frame that you are trading, right? So okay, so in the downtrend, this is how the impulsive move and the retracement basically looks like. As you can see, this market is basically making the lower lows and the lower highs, lower lows, lower highs, lower lows, and lower highs. So as you can see, that shows us that the market is going down, is a bearish market, hence why we say this is a downtrend. So in this downtrend, as you can see right here, we have our retracement starting there and ending right there, and then we have our impulsive move. So remember what I said, the impulsive move is in the direction of the trend. So here the overall trend is down, so meaning that the impulsive move, we are looking to sell at the beginning of the impulsive move and to take profit at the end of it. So we are selling in this market. In a bearish market, we'll be selling right at the beginning of the impulsive move, take profit at the end of the that impulsive move, or where the retracement starts, right? So this illustration basically shows the downtrend, and the best trading decision is to sell the market at the beginning of the impulsive move. All these points here where the impulsive move starts is basically where you want to start selling, right? And then take profit right at the end of that impulsive move. You'll be taking your profit. In this example, like what we said about the bullish market, if you sell at the beginning of the retracement, you'll be trapped and you will lose your trade. It will hit your stop loss before it actually moves in the right direction. You have predicted the right direction and the market is going in your direction, but because of that retracement, it might be too much for your account to hold it, and maybe your stop loss will actually be triggered before it moves in your market direction, and then that's basically when a lot of people will blame the market makers, but basically it will be the traders' fault for entering at the beginning of a retracement that they would not have noticed. So it is very key to understand the impulsive move and the retracements, when to take those trades at the beginning of the impulsive move, exit at the end of it. So that's very, very key. That's a very, very key thing to understand in this lesson. So So the most important thing is how to identify the beginning of the impulsive move to enter the market at the right time and avoid being trapped by this retracement move. To predict the beginning of impulsive move in the trending market, you have to master the drawing support and resistance levels. So that is basically what we're going to jump into right now. So the support and resistance levels, the very key for you to be able to understand the impulsive move and the beginning of retracements, end of those. So basically what happens is that the market, when it breaks through a support or resistance, usually retrace. So in this retesting, basically the retest of a level is also known as the correction, or is what we are calling here the retracement. So it's basically the same thing. It's either called a retest, a correction, or a retracement. So basically it's basically the same thing. All you are looking for here is a point where the market will try to retest before going in your direction. So that's why support and resistance are very key to be able to get the perfect entry on this impulsive moves, to be able to predict the beginning of the impulsive move in a trending market. So whether it's in a downtrend or it's in a uptrend, we'll be making use of those. So what I want you to get out of this lesson is to understand what a retracement is and what an impulsive move is. So in an impulsive move is a move in the direction of the trend that we are in, and the retracement is basically the correction, and that is making either the higher lows in an uptrend or the lower highs in a downtrend. So that's basically what you need to understand here, and we try to catch our trades at the beginning of the impulsive move and exit, take profit at the end of that impulsive move. That is the best way to trade the trending market. So let's move on to our next lesson.